The S&P 500 and Nasdaq 100 are two of the most well-known stock market indexes, but they track different types of companies. Choosing the right one depends on your investment goals, risk tolerance, and market outlook. The S&P 500 is an index that tracks the 500 largest publicly traded companies in the U.S. across multiple industries. It includes companies from sectors like technology, healthcare, finance, consumer goods, and energy, making it a well-diversified representation of the overall U.S. economy. The S&P 500 is often used as a benchmark for the stock market's performance. Historically, it has delivered stable growth over time, but it is affected by economic downturns. Since it includes companies from different industries, it's generally considered a safer and more balanced investment. The Nasdaq 100, on the other hand, is an index that tracks the 100 largest non-financial companies listed on the Nasdaq stock exchange. This index is heavily focused on technology, with big names like Apple, Microsoft, Amazon, and Tesla making up a significant portion. Since tech companies tend to grow faster but also experience higher volatility, the Nasdaq 100 is riskier than the S&P 500. While it has outperformed the S&P 500 in recent years, it is also more sensitive to market downturns, interest rate changes, and tech sector disruptions. Now, let's compare them side by side. First, diversification. The S&P 500 covers multiple industries, making it a safer and more balanced investment. The Nasdaq 100 is heavily focused on tech, meaning it has higher growth potential, but also more risk. If you want a diversified portfolio, the S&P 500 wins. Next, let's talk about risk and volatility. The Nasdaq 100 tends to be more volatile because it's concentrated in technology stocks, which experience bigger price swings. The S&P 500 is more stable since it includes companies from different industries. If you prefer lower risk, the S&P 500 is the better choice. If you can handle volatility for potentially higher returns, Nasdaq 100 is better. What about historical performance? Over the past decade, the Nasdaq 100 has outperformed the S&P 500 due to the rapid growth of tech giants. However, the S&P 500 has provided more consistent long-term returns. If you're looking for growth potential, the Nasdaq 100 wins. If you want steady long-term returns, the S&P 500 is better. Now, let's consider economic impact. The S&P 500 reflects the overall economy, meaning it's affected by economic trends, inflation, and policy changes. The Nasdaq 100 is more sensitive to tech industry trends, meaning it can rise or fall sharply based on innovation, regulation, or competition. If you want an index that represents the whole economy, go with the S&P 500. If you want to bet on the future of technology, the Nasdaq 100 is the better choice. Finally, let's talk about investment strategy. If you prefer a well-diversified portfolio that grows steadily over time, the S&P 500 is a great option. If you're willing to take on more risk for potentially higher rewards, the Nasdaq 100 is better suited for you. So which one is the better choice? If you want a balanced, lower-risk investment that represents the overall U.S. economy, the S&P 500 is the best option. But if you're looking for higher growth potential and are comfortable with more risk, the Nasdaq 100 is the smarter choice. The best index depends on your investment goals and risk tolerance.